Hello, everybody. Happy weekend. It is mid October, and this video will take a look at silver and where we should be heading. After all, we have had a spectacular run, and we haven't really established much for support yet. After all, the 23.6% Fibonacci level, which is this green line, we'll get a little more into that in a few seconds, has not been tested. The calculations for this is the highest level in the last 100 trading days, which is obviously up towards here, and the lowest level in the last 100 trading days, which is either here or here. I'm pretty sure it's this level in here. Either way, it works within these lows down towards here. And within Fibonacci, this can give you areas where support and resistance can be found, an area where market rallies and sell-offs can stall, and for that matter, where reversal of trends may occur. And that's why when we finally have some sort of correction, whether it be a correction sort of like this, which would be a price correction, or we have a time correction, which would be something in the area of like this, then the Fibonacci should really come into play a little well. Of course, if it's more like this, Fibonacci will not meet up, but the moving averages would. And what I'm trying to say is we have to develop support, but you don't know when that's going to happen. It can go all the way up to 27, 28, 30. And I'm going to go through some of the different simulated ones in just a moment. But for now, I want to go to the silver weekly chart. I have no idea why I couldn't get the years before 2005 on here, but the data is really what's important. And there's one trend line on here that I haven't talked about in quite some time, at least not during this rally, and it is now become important once again. And it's the original uptrend line, the trend line that connects these original lows. For if we continue to draw this even further, we can see here that it was resistance, and let me just finish off this line. What we can see on this is that the support level was very big. It had a small breakout of it, and from failed moves can oftentimes bring fast moves. There's that fast move. Found support on it here again. During the financial crisis, it broke through this line, and resistance occurred earlier on about a year ago. It has now managed to get above this trend line. And what this can mean on a longer perspective is almost like this move being that as a failed move, because it went below this trend line and it was unable to reverse its long-term trend. And a lot of silver traders who are saying, yeah, we're definitely going to 80, 100, 200, whichever big number that you choose. Well, that's obviously going to be the case, as there's going to be a lot of big moves that will have to occur to get to that point. And right now, we've been in a spectacular bull run. This is the daily chart. And if you look for different corrections on here, where can you find them? There's a time correction here. There is a small correction in here. Again in here. There was a small correction in here. Even for that matter here, and then a one candle correction here. Really, there hasn't been that much in the area of correcting through time. If one uses higher highs and higher lows, you have this low, you have this low, you have this low, this low, this low, this low, this low, and we still now have to develop the next low. But regardless of the fact, all of these corrections have been short term. We have yet to have had an intermediate term correction within the market. And it's a matter of when and not if this comes to play. For if we have a move where we go like this, we would have more of an intermediate term correction, because we would have a few days that would test lower areas. And I've got a few simulated results for what may happen. Number one, the rally continues as it's going now. And that would mean that we might have a big, nice little move in here, big candle, time consolidation, move higher, and then a big candle lower. This would be a move of about 6 or 7% down, this candle here, but that would still keep the trend to where we are going. We would still need to, at this point, establish some intermediate term support. Today, you might be saying, well, I want it to go down to 22 or 22 and a half. And at this point, you might be saying, I want it to go down to 28 or 27 and three quarters and maybe 29. And as the market goes higher, that's what you'd be doing, is increasing where you'd want the support levels to be found at. Here's another example, and this is a wild one, but definitely potentially possible. And I'm saying this because these big moves in here, they're coming. They are coming. And I mean this by percentage gain. Moves of 8%, 10%, 15% in one day, they are coming. And generally speaking, when the first one happens, that would what overall change the market big time. For example, you have a big move here, which would be the trigger point. This would be a move from 26 to 30. That's a move of 14, 15%. But notice how the volatility would increase in this spot, where you would have two big candles, sideways consolidation, more big candles, a big retracement in price, and then the big moves again. Not saying that's going to happen. I think it's very improbable that it will, but it's definitely possible, and the odds are in the next so many months, within this year, next year, and into 2012, there will be many moves of this caliber. Next one. The next one is you do have a price correction, and in a situation here, you would notice that a trend line would be broken, and then you'd be calculating Fibonacci. Where's the Fibonacci from here down towards here? And well, this would be a successful test, and well, now you would have established support at the 22 level. And this way, when you have the gains, now you would be calculating the Fibonacci instead from here to here. You could calculate the Fibonacci from here to here, and then now the next support level would be roughly around here. And as the market increases, say it goes, instead of going up to 26, assume it goes up to 30, then you might want to increase where you would think you would find support. Next one. And the next one is that of a time correction, which is very possible. This is what a time correction would look like. You have some big moves, say it goes up to 26, maybe a little bit of a consolidation through price, and then a bunch of candles in this nature. Now, what this would do is it would have all those, or not all, but some key moving averages start to flatten. They would meet up within this price as some moving averages would start to be going higher like this, and all of a sudden it would just start to flatten. That may not be the greatest of pictures, but that's sort of what the moving averages would do. Next one. This is totally a reversal, if you will. A big price, big candles in here, which would obviously increase volatility, but a situation where you would have a significant move lower, maybe some time consolidation, another move lower, some more time consolidation, and this would be one of the more devastating things that could happen, but it would not be unrealistic. In fact, I think at some point soon, there will be a 50% retracement from its high, meaning it loses half its value. But that could be when silver is at 200 going down to 100. That could be silver going from 70 to 35. We've seen that wild moves before, so it could very easily happen again. This is the last video. It's a 10-minute video. Hope you enjoyed it, and have yourself a magnificent weekend, everybody, and keep stacking. Bye-bye.